Are you aware of the new HMRC rules coming into effect from January 1st, 2024? If you're someone who enjoys a side hustle, this information is vital for you. From the first day of 2024, companies like Vinted, Depop and Etsy will be required to collect data on how much their users earn. This information must then be reported directly to Hmrc. Sellers on these platforms are being urged to report any income made as part of their self-assessment. If they fail to do so, Hmrc could find out anyway, as earnings information will be shared directly from the platform and linked to their selling accounts. It's important to understand that selling second-hand items, whether it's your wardrobe, unwanted handbags, baby clothes or trainers, could leave you susceptible to fines. According to Hmrc rules, any income below £1,000 a year is considered casual income, which can remain undeclared. However, if that amount is exceeded, the earnings can be viewed as trading, which needs to be declared. This also means income tax and national insurance contributions must be paid. Selling via platforms like Vinted, Etsy and Depop can be a great way to earn an extra income. Often this falls below the casual income bracket. However, it can quickly add up for some, and those earning above this will still need to pay tax on what they earn. Earning £1,000 in a year might seem like a large amount, but that can easily be exceeded if you earn more than £84 a month across a year. Selling large items, second-hand designer clothes and accessories, or even unwanted baby clothes could see this capped amount of casual income easily met. Many won't realize that they need to be liable for tax and income payments to Hmrc if they earn above this limit set by the government. Putting money aside for tax throughout the year is the best way to ensure you'll be prepared for when it's time to complete a self-assessment tax return, which is due by January 31st. Now is the time to take control of finances and ensure you won't have missed paying tax if you need to. With the countdown ticking until the deadline, it can seem daunting to pay tax if money isn't set aside. But there are always options available. The earlier you start considering them, the better off you will be. The first step is to get an up-to-date calculation of what is owed and then to understand what you do have to put towards it, as well as what you can pay in January. In summary, new Hmrc rules coming into effect in 2024 will require online platforms to report user earnings. If you're selling goods online as a side hustle, be aware that earnings above £1,000 annually must be declared. Be proactive in setting money aside for tax and ensure you're prepared for the self-assessment tax return deadline on January 31st. The earlier you take action, the better off you'll be.